All right, so welcome to Coffee with Markus, episode 206. And today we're going to talk about what's happening in the markets. And boy, these markets are crazy, but this will only take us 2 or 3 minutes or so. And then we will talk about buying the dip strategy. I mean, this strategy is super popular for the past year and a half. People have been talking about buy the dip. All you need to do is buy the dip. But is it really that easy? What is this strategy all about, and how exactly are you going to do this? Then, as always, I will show you my current trades, my current positions. I will show you what I did today, what I did last week, so that you know how a professional trader is trading his account. And then, as always, since you are here live, I will be here for you to answer as many of your questions as possible. So put the questions in the chat box on the left-hand side and let's get started. This show is about real money and real trades. I'll show you the trading strategies that I personally trade, the tools that I use to trade my own accounts, and we will talk about the right mindset of a trader. Now, talking about mindset, I'm going to show you how to create SRC profits. And SRC stands for systematic, repeatable, and consistent, because that is the key to long-term success in the markets. So, if you are sick of all the hype and empty promises, and you want to learn trading strategies that actually work, then click on like right now and let's get started. All right, it's so good to be back. As you know, last week I was in Germany for a week to visit my parents together with my daughter, and we had a great time there. Last week, Thanksgiving week, you would think that it is a short week and what can possibly happen in the markets. Oh boy, usually it is a quiet week, but last week, wow. We definitely had some fireworks going off here. So looking at the Dow right now, we see that on Friday, the Friday after Thanksgiving, Black Friday, the markets plummeted down. The Dow was down as much as 1,000 points before settling at a minus of 900 points. Today, we opened higher, dipped lower, went higher, and are just going sideways right now. So a little bit bouncing back right now. The Dow is up 0.8%. Now, also looking at the S&P, very, very similar here. The S&P up 1.5%. And then we have the NASDAQ. The NASDAQ is bouncing back the best thus far, up 2%, almost making back of what happened here on Friday, right? On Friday, also the NASDAQ plummeting down more than 2%. But right now, yay, all the way up there. So it has been fun to trade. So yes, I did trade on Friday on the short trading day. And of course, I placed some trades today. And in a little bit, I will show you of what exactly I did. Also, right now, somehow the iPad that I usually work, or the Stream Deck for switching back and forth between the scenes, it's not working. So therefore, I'm doing it a little bit manually here, but I think we will be just fine. So I want to take a few minutes and talk about the buy the dip strategy, because this has been super popular. And let me just switch a few things around here on my iPad. And I just noticed my iPad forced me to do an update. And as you can see, when I'm sharing the iPad right now, as soon as I start drawing something, I have this really ugly white white space around here. Well, we'll figure this out and we'll get rid of this at some point. But for now, as long as you can see my chart so that I can show you what exactly I'm doing, I think we will be just fine. What do you think? I think we're good. Okay. All right, so let's talk about buying the dips. You see, the buy the dip strategy has been extremely popular for the last, year and a half. In fact, for the past few years, people have been talking about that buying the dip is a strategy that just works. And they say it's pretty easy, right? All you have to do is wait basically until the markets dip or a stock dips, and then you start buying it and everything will be fine. But when do you know how to do this, right? I mean, we'll take a look at a few examples here. And in this video, I want to show you exactly what is the buy the dip strategy. We'll talk about how to use this strategy. We will show you pros and cons of this strategy. I'll give you several examples. In fact, I've been looking for 10 examples for you today of good stocks where you can buy the dip, okay stocks where you should do it, and then also some stocks where you should not buy the dip. And then I also want to talk about why they have been lying to you about this strategy that supposedly is the easiest strategy in the world, right? Okay, so let's jump right on the chart so that I can show you a few examples. Now, one of the examples that many people use here when talking about buy the dip strategy is Microsoft. And we're switching to a weekly chart here. And when you switch to a weekly chart, and we're just zooming out a little bit, see, now we basically see what has been happening since 2017. It has just been going up. And the idea here is as soon as Microsoft dips a little bit, that you start buying it and then it just keeps going higher. So the idea is to buy stocks at a discount. Now, if we take a look at a daily chart here and also see what has been happening thus far this year in 2021, you can see that this strategy on a stock like Microsoft has been a really great strategy. Oops, no idea why it switched to that. So let me just go to the markup here again. There we go. All right, and you get the idea. We're just buying the dip, it goes higher, buying the dip, it goes higher, and therefore it's a foolproof strategy, right? I mean, everybody can make money with the strategy. Another stock that people who like this buy the dip strategy often use is Google. And you see, even on Google, if you're zooming out here for a few years, where Google has moved from $800 to $2,900, this is where most people say, yeah, just buy the dip and you will be just fine. So as soon as Google starts retracing, we will be good. So these are two examples that are perfect for this strategy. But what about some other popular stocks, like, for example, Tesla? If we take a look at Tesla, and we just take a look at what happened here this year, let's actually zoom out. And at first, it seems that with Tesla, I mean, this only can go up, right? I mean, what's happening here? Tesla went from what, $100 to $1,200 in a matter of only 2 years. So yeah, buying the dip seemed to make a lot of sense. But you see, here's one of the challenges. What if you saw that Tesla has been trading at around 900 right here, and then it started dipping back to 800? And you bought it at 800, but then this was not the dip. The dip was going further down to around 600. So at first, you are underwater. Now, again, with Tesla, no big deal. It only lasted for a few months, and then you were right back up. So let me just get rid of this here really quick. Show it to you on a daily chart, and accidentally switch to a 5-minute chart. And we zoom out here a little bit so that you see what happened. Okay, so we're going from 900 to 600, and then within a matter of weeks, I mean, just a matter of months, we're jumping right back. So apparently this is also a very good strategy. However, here is one of the challenges. And the challenge is that during this time, while it is recovering, you're not making any money. So this buy the dip causes you to have some dead money in the market for quite a while. And you see, even popular stocks like Apple here are not immune. So with Apple, also one of the darlings where everybody said, oh yeah, just buy the dip, because Apple has been going from what? Now split adjusted, because Apple had a split of around $20 to $160. That is what, 800%. That's kind of crazy. But as you can see, if we are looking at this year here, and we're switching over to a daily chart so that we can see this a little bit better, then you see this year we started with 140, went down as much as 120. We're piddling around between 120 and 130 until finally cracking 150 and 160. But so for this year, this buying the dip strategy for Apple has not really worked out. Now, let me show you some extreme examples. So one of the darlings of 2020 was Peloton, right? The bike with with an iPad strapped to it. So this is where you see it went from $20 to $170. And then you could have just bought the dip. But let's take a look at this. If you had bought the dip as soon as it dipped down, let's say from 180 to 140, right? And then it dipped down to 120. to 100. Came right back up, but now it is trading at $44. So buying the dip would not have worked out here. Let me show you another example. Another example here is Zoom. Zoom also a darling in 2020 during the pandemic because everybody was switching over to Zoom. Zoom went from $80 to $600. That's a 500% increase. And you would think, oh yeah, nothing can go wrong here with Zoom. All we need to do is buy the dip. But if you had done it here and when it moved up to 180 and it dipped back to 100, let's say, and 40, and you would have bought it here, you see what has happened. It's now trading at $44 and you would sit at a huge, big loss. Now you might say, well, these are extremes, right? I mean, this is Zoom and Peloton here. Let's talk about some more solid stocks, like, for example, Walt Disney. The Walt Disney Company, if you're looking at a weekly chart here, will also see that Disney is a stock that has been moving higher, relatively stable, and then recently reached 200. And you might say, okay, Walt Disney here reaching around, oh, I'm still on Peloton. Let me just move over here to Walt Disney, take another screenshot. Doesn't want to do this. Again, this darn iPad upgraded to iOS 15. And it's not as nice as 14 point something was, so gotta figure out. And it did it right before Coffee with Markus, but you get the idea here. So this moved as high as 200, and now it started dipping to 190, and you say, oh my gosh, that's a bargain. Let's buy this maybe at 180 and 170, and you see that right now it is trading at 148. So why am I showing you these examples when we talk about buy the dip strategy? Well, this is where, you see, I'm kind of mad when I hear this, that people say, oh my gosh, yeah, you just have to buy the dip. You will be just fine. No, it doesn't work this way. You need to know which stocks are really worth buying the dip. And even if you look at solid stocks like Disney, or even when it was Tesla or Apple, it can be that these stocks are going sideways for quite a while. And this is why I think, or I say, they have been lying to you, because they say it is that easy. You just wait for retracement. Now, let me show you some very specific examples of stocks that I am currently trading where buying the dip is not as easy, and I want to show you exactly how I am doing it. So I'm going back to my iPad here, and you know that one of the strategies that I like to trade is the wheel strategy. And the idea here of the wheel strategy is it keeps defaulting to Peloton. No idea why, so I might have to refresh something here. But so the idea is that you're selling puts, and by doing so, you're buying stocks at a discount. Now, this is where I like to make sure that this stock is going sideways, right? Sideways or slightly up. And as you can see here, Boeing has been trading sideways pretty much for the whole year. And we already know the story about Boeing. Boeing is doing well, and then there's some more news about planes that are not working or that are grounded or something like this. And then it dips. And right a few weeks afterwards, they say, oh, we fixed the problem. And the FAA says, yeah, you fixed the problem. It is all good. And Boeing is right back up. So this is one of the stocks where I have been selling puts, and I'm okay getting assigned there. Another one is ARGF. So you see, the stocks that I rather like to trade is stocks that are sideways, not something like Microsoft that is just shooting up, or Google that is just shooting up. For me, stocks like ARGF, Boeing, Merck, I mean, it's a trade that I did today. And if you look at a weekly chart, we see for how long Merck has been going sideways. So these are stocks that I like to trade. And if you're interested in learning on how exactly I trade these stocks, I'll link to a few videos in the description, especially to the wheel strategy. Take a look at this. Anyhow, so long story short, what is it with buying this dip strategy? Yes, they who sell you this buying the dip strategy or say, oh yeah, it's that easy. It has been working out all year. They like to use major stocks like Microsoft and Google. Maybe they show you the indices like the S&P 500 or the NASDAQ. Let's take a look at this here really quick so that you see exactly what I mean by this. So if you're switching back to the S&P 500 here, and we are looking at a weekly chart, you see, yes, buying the dip would have worked out. But as you can see, you can also get hurt very badly when you're picking the wrong stocks. So whenever they tell you, oh yeah, trading stocks is easy, no, it is not. Trading stocks and options can be simple, and this is what I like to show you here on this channel. It doesn't have to be complicated, but it is not as easy as they say as taking candy from a kid. By the way, what kind of saying is this? Have you ever tried to take candy from a kid? That is not easy at all. I mean, these kids are holding on to their candies. Anyhow, hope you find this helpful. If you would like to learn trading strategies that work, take a look at the links that I have in the description for you, and I hope to see you in the next video. Take care. All right, just kidding. You know that this is the part that we are cutting out of this video here because I really feel passionate about this buying the dip strategy where everybody says, oh, yeah, it's so super easy. All you need to do is just wait until it goes back to a moving average. No, it's not. I mean, whatever technical tools you use here, it is not. There's a little bit more to this. And this is why I'm very, very passionate about this. Okay. Anyhow, so since we have been talking about my trades, let's actually move over to some of the trades that I did so that you see what positions I'm in right now. And currently, I'm not in any positions according to the PowerX strategy. And that is no surprise because if we are taking a look at the major indices here, and let me just switch over to the iPad, this is when you see that over the past, months or so, the markets have been just chopping along. We see it right here as we zoom in a little bit into a daily chart, right? And for trading the PowerX strategy, we need a trending market. And when there's no trending market, this is when also PowerX Optimizer will tell you, okay, no problem. The scanner did not find any symbols matching our criteria. So the tool keeps you out of trouble because it's a good thing, because when this happens, the markets are usually choppy or the best entries, as you can see, have already occurred and nobody likes to be late to the party. So this is why during these times when the markets are choppy, we can actually trade the wheel strategy. And this is what I've been doing last week and this week. And let's take a look at some of the wheel trades that I'm in. So first of all, there is ARKF. So ARKF is Kathy Wood's financial ETF. And if you're going back there, and again, I want to show you my criteria of how I pick these stocks. First of all, I want to make sure that these are value stocks, and I want to make sure that they have actually found a bottom. And as you can see here, so we are going sideways between what? I want to say 45 and 55. And this is why last week I sold the put with a strike price of 47.50. Now on Friday, it closed at 47.49, 1 cent below my strike price, and I got assigned. And I don't care. This is actually fantastic because this morning I was looking at selling, let me just show you here on the calculator, of selling some calls against my existing positions. And the two calls that I have in mind, let me just zoom this in here, were, if I can just show it to you here, the 48 call or the 47.50 call. Now I decided to go for the 48 call, and right now I have an order in to do it for 80 cents. And let me just correct it here. Earlier this morning, I was able to get as much as 95 cents. Wanted to wait because markets have been crazy this morning. And you see, after a 4-day weekend, and this is basically what we had here with Thanksgiving and Black Friday, with a 4-day weekend, I wanted to see how this all played out. But here is what I was planning to do. And this is the order that I have in right now. So I have 2,100 shares, and I bought them at 47.50. Right now, as we are talking here, let's just go back and take a look at ARKK. It is trading at 47.76. So I am already making money on my shares. But the idea here is to sell calls. And with these calls at 80 cents, I would receive $1,680 in premium. And this premium, I will receive and I will keep no matter of what happens towards RGAF. And here are the things that can happen. Either by Friday, it is trading above $48, then the shares are getting called away. The shares that I bought at $47.50 are getting called away at 48, so I have to sell them at 48. I'm making some money on the shares, and I'm keeping this premium of the puts that I sold. So then, in this case, I would make $2,730 in just 1 week. That's not bad at all. And again, I used the calculator to say, okay, do I just want to sell the 47.50 strike, or do I want to go for the 48? And I looked at my potential profits here. It was $2,205 for the 47.50 or $2,730 for the 48. And I decided to go with the 48. So this is one of the trades. The other trade, Boeing, super surprising here. So Boeing, I sold the $207.50 put. So I got assigned at $270.50. Let me just see if this works here. Yeah, it is showing Boeing right now. So let me show you right here. So I sold the 207.50 put. I received premium for this, and I keep the premium no matter of what the stock does at expiration. It moved below 207.50, as you can see right now, trading at $197, and I got assigned. So I right now own 500 shares of Boeing. At this point, right now, I'm down around $10 per share. So this means that I'm down $5,000. And this is where it goes back to this, oh, all you have to do is buy the dip. No, it can be that we are down here for a little bit, but this is why it is super important to invest in super solid companies. And Boeing, for me, is a super solid company. Now, why do we have this sell-off here? Well, the sell-off that happened was because they've discovered this new COVID variant that is super aggressive and super contagious. And this is why airlines have taken a hit, like, for example, United Airlines, as you can see. So last week, down, 13% or 10%, and today just slightly up, American Airlines. And these are the airlines that are buying from Boeing. However, here's the deal, right? I mean, most people know Boeing just as the airplane producer, but that's not the case. I mean, Boeing, if you think about it, right, only a third of the revenue comes from planes. Another third comes from aerospace and defense contracts, right? And then another third is what they call global services. Now, here's the deal. Planes is the least profitable of their divisions, the least profitable, right? These two are way more profitable, but we don't know about them because they are not very public. I mean, for a reason, right? I mean, you don't want to know what kind of defense contracts they have, right? And whatever military contracts they have. So, I mean, they are a publicly traded company. This is why people know this. However, this is where most people think, oh, Boeing is planes, and if airlines are not doing well, then so Boeing will not do well. But you see, super solid company. If you look at the financials here, we see that, of course, last year, right, if you take a look at this here, so last year they dipped down, they produced a loss because, of course, they didn't get as many contracts and as many plane orders as they usually do. But overall, I want to say this is a solid company, so I'm not too concerned about this. I'm almost certain that sometime this week we will see Boeing bouncing back probably to around 210. And so I will be selling calls against it. Didn't do it today because I didn't see enough premium in there according to the PowerX Optimizer calculator. I think I actually looked at this. Yeah. So as you can see here, I was looking at Boeing, but this were earlier this morning. There was some premium there, and then it evaporated very, very quickly. So I'll wait for to be able to sell some calls here for Boeing. No big deal. All right, what else do we have going on? LVS, a little bit all over the place. right? And LVS, I got assigned at 58. So right now, I'm a little bit down on this position. However, what I did on Friday, and very, very frustrated with the iOS update here. So right now, it seems that whenever I try to take a new screenshot, it is still showing me Boeing. Like, what the heck? Anyhow, so I sold more 35 puts, collected some really good premium on this. And right now we will see, I actually want to get assigned at 35 for some more shares. This is part of my rescue mission. And I only have flown thus far a 1/3 of a rescue mission. So I still have some buying power reserved here for other rescue missions. And that's what I'm looking for right now. So kind of hope that by Friday we're trading below 35 so that I get more shares of LVS to do the DCA, the dollar cost averaging. By the way, if you would like to learn more about this rescue missions, I'll leave a link in the description so that you can take a look at this. So not a whole lot going on. Merck is another good one. So Merck, just mentioned it a little bit briefly before. I have been selling puts today. What did I sell on Merck? Let me just quickly see. So I did sell the 72 puts. And let me see if, nope, this stupid iOS update, I got to figure it out. Until the next Coffee with Markus, we'll have it figured out. So anyhow, I sold the 72, and this is where, again, Merck here, super solid company. I switched back here to a weekly chart, and as you can see, since 2019, we have been trading between 72 and 88. So I'm absolutely okay owning this at 72. So we'll see what happens here by Friday. And if everything goes well, I'll make a few $100s here in premium. So not bad at all. All right, what else do we have going on here? Right, my friend, right. As you know, this is one of the trades where I'm stuck in. I actually have a plan of what I want to do. Right now, it is super important for me to see where is the bottom for right. Because it used to be around $4.75. Right now, it seems that we are getting closer to $4.50. So I have to wait probably until the end of the week before I can deploy my next strategy here on RAI to start collecting more premium on this, because I mean, it seems that I'll be stuck in right here for another few months. And of course, as we come towards the year end, it's time to start about taking this loss, right, to harvest a tax loss here, or does it make sense to do something else with the position? And as soon as I know where the nearest, where the next bottom is, if it is at $4.50 or if it is maybe at $4, then I will deploy the next strategy here. So stay tuned. All right. Finally, UNG, United States Natural Gas Fund. Oh my gosh, has this been a fun one to trade? So with this one here, I actually got assigned at $17. So I have, how many shares of UNG? Let me just quickly check. I have 3,000 shares of UNG. Let me see if I can. It still shows Boeing. So frustrating. What the heck here? Okay, anyhow. So this is where I have 3,000 shares here that are assigned at $17. And I have been able to sell puts and calls on this. In fact, earlier today, I bought back some calls that I sold on Friday and pocketed $2,000. So I'm actually $1,500. So very, very happy with this trade. And I'm planning to sell more calls. We will see what happens there. Today, they're slightly down. They've been trading a little bit all over the place if you look at a 5-minute chart here. So as you can see today, they have been as low as $15.79 and as high as $16.21. So that's a 50-cent move. And I mean, on average, UNG moves by what? $1 a day. So this will be a fun one. There's a lot of implied volatility here. So I love trading UNG. Anyhow, these are the trades that I'm currently in. This is what I traded today. This is what I traded last week. And now you also know what my plans are for the remainder of the week. So yes, my plans are that I am planning to sell calls on ARKF. I'm just waiting for a little bit of a pop here. I don't want to sell them too cheap. And I think that we'll see the pop closer to 48 here. A little bit Probably not later today. I mean, as you can see, we have been trading at high as 48.20. If you look at a 5 minute chart, ding ding ding. Here's the bell. So we are closing right now at 47.71. So I want to wait until we get up to 48 before I start selling calls here again. Same with BA. So finishing on a strong note. Want to wait until it pops a little bit higher. LVS actually. Hope that LVS goes a little bit lower, that I get assigned a little bit more. And Merck, hey, as long as we stay above 72.50, we are fine here. UNG a fight one, and we talked about right. So not a whole lot going on today. Dipped lower, moved a little bit higher here. So we shall see what happens over the next few days. Okay, UNG also super, super quiet for UNG here today. Anyhow, so stay tuned so that you see exactly what happens. By the way, is this helpful at all when I'm walking you through the trades that I've opened, and also when I tell you a little bit about this buy the dip strategy, and how I'm really getting mad when some people say, oh yeah, trading is easy, that's all you need. Just buy some Tesla, or just buy some Amazon, or buy some Apple. It's not that easy. Trading can be simple, but it is a profession and you have to put your hours into this. Anyhow, if this was helpful, just click on like. Would really appreciate if you could hit the like button, because this way I know which topics are of interest to you, and I'll do more of the topics that interest you, and well, few of the topics that you don't care about. Okay, so let's take a look at some of the questions that you have, because we still have some time. We will spend a few more minutes here. And David asked, for example, after being assigned, do you sell calls immediately, or do you wait for confirmation as to a trend? Usually, I'm selling them right away. The only reason why I didn't do it this morning is because I thought, oh my gosh, the markets have to digest of what happened on Friday. And they sure did, right? I mean, it took the markets like an hour and a half before they figured out, okay, are we concerned about the new coronavirus? Are we not? So I'm usually not in a rush to do it Monday morning, the first thing. I like to watch it for an hour and a half. And you know what? If I can sell the calls tomorrow, I'll be just fine, because there's still a lot of uncertainty in the markets here. All right. So good to see everybody. Marlon here from Las Vegas. Why would someone sell puts above the current price? What is the strategy behind this? Well, it's basically, the idea is, if you're selling puts above the current price, you expect the stock to rally, right? To rally above there. That is the idea. And when you're selling puts that are in the money, so above the current price, you're collecting a lot of premium. So Marlon, this is usually when people think that there's a strong reason, maybe an earnings play, why this company will rally here over the next few days. That's why it is. So Todd says, the meaning behind buying the dip to me as a day trader just means averaging down, adding to your initial position. Not necessarily. I mean, some people take this as adding on to a position, but also some people take this as buying into a position, right? When you see stocks like Tesla just running away, let me just go back here on a daily chart, and you see that the Tesla starts running away. Hold on, where are we? Here. Okay, so when you see that it rallies from 800 to 1200 in a matter of weeks, you want to wait until it comes back a little bit, because it's super difficult if you're buying at the high, right? So you don't want to buy at the high, but it's super difficult. So yeah, I mean, some people use it in the way that you described it, for day trading, for adding to a position, but some people also use it for establishing a new position here. Okay. Good. So let's see. Juan says, thanks for all you do. I was watching one of your older videos and noticed you usually sell options with 30 to 60 days to expiration. No, I always buy. I buy options with 30 to 60 days to expiration, because I want to make sure that I still have enough time for the stock to start moving up. So when you're trading the PowerX strategy and you see the book somewhere there, you get the idea? There. Okay. Then you want to buy options, and you usually want to give it at least 30 to 60 days. I usually like to go 45 to 60 days. But then when you're selling options, this is where I prefer selling weekly options, because it gives me more flexibility. And this is what I do with the wheel strategy. Hey, by the way, if you would like to have these, let me see. There we go. If you would like to have these books, there's some link in the description. I'll be happy to send them to you for $4.95, or you can buy them on Amazon. I believe on Amazon they're more expensive, so go to the links right below here in the description, and I'll be happy to send you these books if you want. Otherwise, also link to a few videos here so that you can watch videos depending on what you like to do. Some people like to read, others like to watch. Okay. Anyhow, good. So Claudio says, if you have an account that doesn't allow you to sell puts, how do you buy the dip? Well, we can buy calls or you can just buy stocks. I personally like to get paid for a stock to retrace, right? And I usually also don't like to buy the dip as it happened today with Merck. So if you go back and take another look here at Merck, you see one of the stocks that today dipped from around $77 to $74. You see, I'm getting paid right now to buy it at $72, right? And this is what I like. So it can dip even further. And but back to you, Claudio, to your question here. If you have an account that doesn't allow you to sell puts, just apply for it. I mean, I do believe that I did a video on how to apply for this. I'll link to it in the description when I find it. Take a look at this video. You just have to apply for level 3 option permissions. And you can easily do this. And if your current broker says, no, you, Claudio, are not getting it, switch brokers. I mean, it's really that easy. But there's no reason for a broker to deny you this if you know what you're doing. So you have to say the broker that you know what it means by selling puts and that you do have some experience. And that's what I highly recommend. I mean, at least on a paper trading account, on a simulator, get some experience before you do this. Okay, good. Is this helpful? If it is, click like. You know the drill. Okay. Kali Fortune says, Apple, sell. Well, I don't know. They just recently announced that they're working on the self-driving car, and they moved up the timeline. So it seems that they're making some progress there. This morning, they announced that they are also developing a headset, a virtual reality headset that should be available by the end of the year. And they say it is more powerful than the iPhone, or it will be at some point be more powerful. So I don't know. This would be selling into strength. Don't know how much sense it makes, but hey, the markets exist because we all have a different opinion. So if you want to sell, you need somebody who wants to buy from you. So somebody has to say, I'm bullish on Apple if you are bearish on Apple. So that's absolutely fine. Yeah, Marlon, that's probably the best thing, buying the dip, buying spinach and artichoke dip. There we go. Okay. Yeah, and the forced updates are a crime against humanity. Yeah, I don't know. I don't like it. So I'll figure it out. By the next Coffee with Marcus, we will have it figured out. It will be all good. Okay. Jim says, switch the program up, show your trades first, the market, subject, and then questions. You know what? I think we all got used to this. I kind of like this flow. So I think, Jim, that I'll leave it like this. I'll think about it. We'll see. Okay. Good. Twin Screw says, I decided to roll a few positions on Friday instead of getting assigned. Still made a lot of money. Good. I mean, you see, it's so interesting. Sometimes people are so against certain things. They would say, for example, oh, I always roll, or oh, I never roll. You see, you got to find something that works for you, that you're comfortable with. And I will never argue with somebody who's making money. So if you rolled and you made money, I mean, who am I to say, no, you're wrong? I mean, your account is proving that you are right. So there you go. Okay, anyhow. So Hans is asking, how was the trip to Germany? Yeah, last week I went to visit my parents over Thanksgiving break together with my daughter, and it was cold. It was freezing cold. It was 34 degrees. And so not used to the cold anymore. Anyhow, good. So yeah, Tesla is begging to be shorted, totally overvalued. This is what most people think, and yet Tesla is hanging in there, right? I mean, this is where you see, I have this little mug that says, "Trade what you see, not what you think," because the markets don't care what I think. So this is why I like to see what I'm trading here. So, all right. Good, good, good. What else do we have here? So the problem with buying the dip is you never know when the bottom is. Exactly my point. This is why I'm kind of mad when these people say, "Oh, all you need to do is buy the dip." No, that's not all you need to do because you're exactly right, right? So trade what you see, follow your plan, and you still can get caught. I mean, the markets can be super irrational. And even if you follow your plan, I mean, the reason why, as traders, we are having so much in reward of making 60%, 70%, 80% per year is because we are taking risk. There's always risk in trading. So make sure. All right. So let's see. Yeah, talk about the bus with Michael Burry. I mean, what was he shorting? Tesla. He was also shorting something else recently. I think he was going against Kathy Wood. He was right with the housing market. Absolutely. Is he the new oracle of the stock market? I don't think so, right? I mean, and he has been wrong a few times, but it's all about a matter of time. Maybe if you hold it long enough, you will be right. We'll see. We'll see. Okay. Good, good, good. So option trading is similar to bucket shop speculation. I don't think so. You see, when done correctly, you see, I agree with you if we are talking about far out of the money options. That's a gamble. I mean, people are buying out of the money options, hoping for a big move and hoping that the option will make 200, 300, 400%, and that is a gamble. But I believe that there is a way to trade options for systematic, repeatable, and consistent income. And this is why I'm doing the channel here and sharing my trades. And once a month, I'm sharing an update on my account. So there you see exactly how much money I made, how much I have in realized profits, how much I have in unrealized profits. And so I'm going to do this next week because today is what, November 29th. So we still have a few days left in November here. Okay, so what else do we have here? And yeah, exactly. I mean, options trading can be a lot of things depending on how you use them. So you can use them for good, you can use them for evil, and you can gamble your money away. Okay. Anyhow, so what else do we have? Good questions here. So yeah, Kali Fortune says I'm long-term bull on Boeing. They aren't going away. It's hard to believe, right? I mean, are we really buying all our planes from Airbus? Are we really giving all of our defense contracts to other companies than Boeing, who has been around forever and a day? Kind of hard to believe, right? All right, let's see. CJ says, sounds like a silly question. Do people analyze the markets with too many indicators and lose, keeping the things simple? You see, I'm absolutely guilty of this. I actually plotted too many indicators of my chart. At some point, I had plotted more than 20 indicators of my chart. There were so many indicators that I could hardly see the prices, right? And half of the indicators were selling buy, were screaming buy, and the other half was screaming sell. So this is where, right, I suffered from analysis paralysis. This is why right now I'm using 3 indicators when trading the Power X strategy. And when trading the Will strategy, I'm just using support. I mean, that's really as easy. I'm not using any indicators when trading the Will strategy here. Anyhow, good, good, good. So 1969 TX Cowboy says, I thought you didn't like to sell puts on pharmaceutical companies. No, not on crazy pharmaceutical companies. I mean, Mark, they are a Dow component, a component of the Dow Jones. They've been around forever and a day. Super solid. I mean, this is a value stock, as valuable as it gets. So I would stay away from newer companies like BioNTech. I mean, and one-trick ponies, right? But Mark, I mean, if you go to Walgreens or CVS, I mean, probably 20% or a third of all the stuff that you see in a pharmacy is probably from Merck, right? I mean, they've been around forever. So no, I'm okay with Merck here. Okay. So let's see, any ideas how to get up enough money to begin investing? You can invest with as little as $5,000. I mean, $10,000 is better, $20,000 is better than 10,000. And I mean, how do you get money? Save it up or make some more money by, I don't know, doing a side gig. Maybe it makes sense looking into DoorDash, Grubhub, Uber. I don't know, but there's probably some ways to make some extra money here. All right. Cool. What else do we have here? Oh my gosh, Teresa. I know Teresa and Teresa is in our mastermind, so we texted last week. When did we text Teresa? Did we text on Thursday or on Friday? On Thanksgiving or on Friday? And yes, Teresa made over $200,000 right now trading the wheel strategy, 122% RI for the wheel. Congratulations. I know that last week was your best week ever. And I've seen the trades that you took there. So again, congratulations. So Teresa is part of our mastermind, and she's also now a coach for Rockwell Trading. And there you see why. I mean, what a baller, right? Okay. Good. So let's see, what other questions do we have? Twin Screw also says, also in the 200,000 club. And this is where it goes back to, I mean, Twin Screw and Teresa, I mean, you're just a few of the traders who are following this here and who are trading options. So when somebody said earlier that options are like a speculative bucket shop, I disagree. And now you know why. Okay. Good. All right. So what else do we have here? Oh my gosh, it's almost time. I know that there's still quite a few comments here, but also promise that we keep this coffee with Markus to 45 minutes. So if there is a question or a comment that I haven't answered yet, just wait until this video is over. Post it in the comments underneath the video, not in the chat right now. I'm going through as many questions as possible and comments. If I missed it and if you want it answered, I'm looking at all of the comments that are below this video. And in order to post a comment there, you have to wait until it is over, which is pretty much now. Hey, hope that you enjoyed it. If you did, click on like, and I hope to see you in the next Coffee with Markus. And tomorrow morning, the stock market update. I have a few videos popping up right now. Take a look at those. You're going to enjoy them. All right. Have a great rest of your afternoon and a fantastic trading week. Talk to you soon. Take care.